takes a look at the ask rate in Q3 and Q4 for meeting your guidance, would it be fair to say that Q3 and Q4 will be better than usual? Because for the industry, Q3 historically has been a weak quarter because there are a lot of furloughs and there are a lot of holidays.
Definitely, our growth has picked up. It has been incrementally better from Q1 to Q2. And as we see the demand pick up, I do believe our Q3 and Q4 growth will be incrementally better. And that's what is giving us the confidence to be at the midpoint of the guided range.
In your investor call, you mentioned that the deal bagged in Q2 has been above the average of last 4 quarters. Now, I know you don't give a, guidance or a TCV kind of an indication, but given that you've bagged a large deal, how would you like to indicate that how strong and robust your deal pipeline is?
I mean, we have been in the last 3-4 quarters. In Q3 of last year, we said we had the highest booking, and then again in the first quarter of this year, we said that was the highest booking. So we've been running at a pretty healthy and incrementally higher bookings. And I mean, as I said, this has been higher than the last 4-quarter average. I think what you have to see is broadly the market dynamics and the demand environment is very good, especially in the US. A lot of customers are looking at reinvesting some of the savings that they have from various initiatives that the government has taken into some of the newer programs. So we see this panning out. Overall spend on the discretionary side seems to be giving us a tailwind in terms of opportunities and the demand. And we are really working extra time to fulfill the demand and drive better execution of what we have won.
Right. Prateek, one tailwind though for margin was rupee depreciation. Going forward, what are the headwinds and tailwinds that you think you're going to face, especially if growth momentum continues like this?
Yeah, so the most popular tailwind that is known to everybody is clearly the exchange rates. And as we close September quarter and move on to December, based on the average exchange rate for the quarter, if we stay at where we are today, it is going to give us a tailwind in the next quarter as well. As far as headwinds are concerned, it's again well known the wage increments that are planned on a quarter-to-quarter basis. So those are all planned for, those are all in the numbers if you like, and incrementally I don't see any major either tailwind or headwind, and we are therefore sort of sticking to our guided range of 19.5 to 20.5 in terms of EBIT margin.
Right. CVR clients asking for forex gains pass back as yet or not yet?
I think it all depends on the mix of business that we are in, and there is a significant amount of our revenues which are in managed services or fixed price contracts. So there are definitely some dynamics playing out due to improving or the strengthening dollar. So I think it's all factored into our guided range. So at this point, we want to just stay with the guided range, and some of the incremental benefits that we are getting out of the forex. I mean, as we had mentioned earlier, not everything will flow into our bottom line. As we continue to evolve our digital offerings and the next generation services, the propensity to invest is a little bit more, and that is being helped by the forex benefits as well.
Give us a broader sense, more to margins stand at about 10.8%. Will they remain at these levels, or could we expect some more improvement going forward?
Yeah, I mean, see, we were the first to call out margins in different modes. And as you know, we've called out the EBIT margins. I do agree the gross margins in mode 2 business, because of the nature of offerings, are higher. But however, there are very number of areas where we need to invest in. So our SG&A is a little bit higher on our mode 2 business. We've invested in serious practice development efforts in all the mode 2 areas, and that's what is we're setting up labs, we are continuing to organically build lot of capabilities in Mode 2. I think that's what is driving a little higher SG&A and lower EBIT. And when I first called out those margins by different modes, we were also very cautious that this could fluctuate because of the small size and the different dynamics that plays into different modes of our business. We generally expect mid-teens type of EBIT margin in the near term in this business. However, there could be some fluctuations